Good morning, restaurant owners, and welcome back to our weekly training. My name is Tim Cernett. I'm the CPA and founder of Financial Optics, and we're here to help independently owned restaurant operators improve profits and cash flow. We've spent the last 3 weeks on food costs side of prime costs, the five moves overview, food cost control tools, menu engineering. This week, we're shifting to the other half of the cost, and for many of you, it's the one that causes the most stress, labor. Controlling your labor costs is one of the most difficult things restaurant owners undertake. It's complicated. You're dealing with humans, not ingredients, and there are a lot of moving parts. And honestly, it's a lot easier to look at your food costs and implement processes and procedures there than it is to get labor right. But it is doable and it can be improved significantly. Let me move to the slide deck for this week and we'll get into it. I need to share my screen here. Hopefully, with Big March Madness, you all had a big weekend last weekend and are setting up for a nice weekend this week. So, labor cost strategy from cost center to profit driver. Okay, we're going to cover this over 2 weeks. This week is the conceptual foundation, how to think about labor, the mindset, the framework. And next week, we're going to get hands-on with the technical tools, KPIs, scheduling from productivity data, shift management, and the continuous labor management cycle. Today sets the why, and next week sets the how. So here's what the latest data from the National Restaurant Association tells us. Full service restaurant labor costs hit 36.5% of sales in 2024. That's the median across the industry. Historically, that number was close to 33%. So labor has structurally shifted upward. We all feel that. Wages are higher, and the competition for good people is fierce. But here's what's really interesting. For the full service operators that actually reported a pre-tax profit, hopefully you're in that group, the labor was at 34.2%. That's more than 2 percentage points below the median. On a $2 million a year restaurant, 2 points is $40,000 a year. Same labor, same market, same wage pressure, different approach. And only about a third of restaurants actually hit their labor budget last year, or in 2024, the year of the survey. 44% spent more than they planned. So the majority of restaurant owners are spending more on labor than they intended, which means there's a real opportunity for the ones who get this right. And it's a mindset reframe. Most restaurant owners think of labor as cost to be controlled, something to minimize. But what if labor was actually your greatest profit lever? Not a line item to slash, but a resource to optimize. That shift in thinking is the foundation of everything we're going to cover today and next week. So, ideal labor is not the cheapest labor. Let me give you the definition of ideal labor because once you see it, it changes how you think about scheduling, staffing, and every labor decision you make. Ideal labor is the fewest hours that produce the best guest experience consistently while maintaining staff satisfaction and operational efficiency. That's a mouthful. So let's go to the slide and look at the number. It's not a number to minimize. Slashing hours without the framework destroys service and retention. It's not a staffing habit. We always run 4 servers on Friday. That's not a strategy. It's inertia. And it's not a resource so labor is a resource to optimize. It is your greatest profit lever when we assigned with intention. So there are 3 pillars for ideal labor. The first is guest experience, appropriate wait times, attentive service, consistent food quality, the same experience every time you repeat for your repeat customers as they walk in. Understaff and you lose guests, The revenue impact of poor service far exceeds whatever you save that shift. Fast service means nothing is incorrect or disappointing. Speed without quality isn't a win. It's a shortcut that costs you repeat business. The employee experience, manageable shifts, clear expectations, proper training. Staff satisfaction drives retention and performance. High turnover is one of the most expensive hidden costs in the restaurant business. You've got recruiting, training, and productivity lost while someone gets up to speed. Do you have the training tools in place to bring your staff up to speed so they can reach maximum productivity? And if your new hires are learning by trial and error, that's labor waste before you even hit their stride, and it also produces poor guest experience. Your best people will stay when they feel the operation is well run. They leave when they feel chaos. And then profit outcomes. That has to be a main pillar. Controlled labor costs, optimized scheduling, productivity metrics. This is where the discipline lives, but it can't come at the expense of the other two pillars. Financial health ensures sustainability and growth, but a broken labor system doesn't just drain profits, it creates stress for everyone, including you. Every labor decision you make needs to balance all three. Sacrifice guest experience to save on labor, you lose revenue. Sacrifice employee experience, and you lose your best people and spend a fortune on turnover, ignoring the profit outcome, and you're working hard and going broke. The ideal labor model holds all three in balance. Vince Lombardi once said, perfection is not attainable, but if we chase perfection, we can catch excellence. The perfect labor schedule doesn't exist, but if you chase it with the right framework, you can catch excellence, and excellence shows up in your bank account. Labor waste, the workforce. Before you can optimize labor, you need to see where value is being lost. Labor waste comes in two categories, the workforce waste and the operational waste. The next slide, we're going to look at the operational side of it. And most of it is invisible till you start looking. A labor waste and labor waste is different from food waste. It's harder to see. Nobody puts idle time on a clipboard, but it's there and it compounds over weeks and months into real money. An efficient labor approach isn't just about saving money, it's about strategic allocation of your most valuable resource. So, defects and refires. Every mistake that requires additional labor to correct it doubles the labor cost of that item. A refired steak isn't just a food cost, it's a cook time, server time, and guest patience lost. Reducing defects is a training issue, a communication issue, and a systems issue, not just a kitchen issue. Overproduction, making too much just in case leads to waste. It's a simple concept, but it happens all the time in restaurants. The overproduction wastes both food and labor that went into preparing it. And that goes back to week 2, where we're doing sales projections to understand exactly how much we need to cover projected traffic in the restaurant. Waiting and idle time, staff not actively producing value during their shift. This isn't laziness, it's usually a scheduling or deployment problem. You've got the right people in the wrong times, or you haven't matched staffing levels to actual customer volumes. We're going to look at some of the tools to address this today and next week. Non-utilized talent, your $22 an hour sous chef doing $15 an hour tasks. High-paid staff doing low-skill work that could be handled by someone at a lower wage level. This is one of the most common and expensive forms of labor waste. And we're going to look at a tool that makes it very concrete in a few minutes. So, operational waste comes down to motion. Inefficient station setups cause extra steps that compound across every shift. Every unnecessary step multiplied by every shift adds to a significant labor waste. Proper station setup and floor design eliminate steps and reduce unnecessary movement across your team. Inventory related waste, emergency store runs, improper ordering, creating wasted labor hours and disruption. This connects directly back to the inventory and the ordering systems we covered back in week 2. When your par levels are dialed in and your ordering is based on projections, you eliminate the scramble. Extra processing, making items from scratch that don't meaningfully improve quality or justify the additional labor investment. This is a hard conversation in restaurants that pride themselves on house-made everything. Many restaurants take great pride in those homemade items, but is there really a significant difference on some things like salad dressing when a house-made versus bought from a quality vendor? It's worth asking the question honestly, and it may come down to your concept and your values. There's no right or wrong answer here. It's just something that you need to take a hard look at. You don't need to fix all these at once, but you do need to see them. And the tool for seeing them is something I call focused observation, which starts with understanding where all your labor hours actually go. Let's move on to the next slide. The 4 core labor categories. Every hour of labor in your restaurant falls into one of 4 categories: setup, prep, and cleanup. Each one of these holds hidden efficiency opportunities. The key is focused observation, slowing down, watching your operation objectively, and asking at every stage, is this the best use of the people right now? Setup, organization is the key. Well-stocked, clean stations save minutes every shift. And those minutes accumulate into significant savings over time. This is where focused observation starts. Watch your opening routines. Is every station ready to go? Are people hunting for things? Are they duplicating effort? The setup phase sets the tone for the entire shift. Prep. This is where task benchmarking becomes powerful. The question isn't just who can do this fastest, it's who can do it at the lowest total cost. And let's bring over a little analysis and an example. Honey mustard dressing. This is a batch recipe that's made in-house. It's 256 ounces, and the cost is $24. Now, we know the cost is $24 because we did our detailed menu costing cards, and every item on the menu and every ingredient that goes into every item on the menu is costed. And a batch recipe for this particular dressing is $24, 256 ounces, 9 cents per ounce with no labor. However, when you add in the labor, if we use 1428, and how did we get to 1428? Well, there's typically 2, 3, maybe 4 people that prepare this particular batch on an ongoing basis. And you can see the dates here. This is an old example. And it measures everybody's hourly rate and how long did it take them to make that batch. So whatever their hourly rate is, by how long it took them, that's the batch labor cost. We measured that over the course of 2 weeks. And we ended up with an average of 1428. However, if we look at this a little closely, we can see that the actual lowest cost is, where did that go? It's Olivia at $12.35. And even though she takes longer than Laura at a lower labor rate, it's a lower batch cost. So it's not just who can do it the fastest, it's analyzing maybe somebody at a lower labor rate, lower skill level, can actually prepare it at a lower batch cost. So the key is analyzing what is the lowest cost for the batch, not just who can do it the fastest. So It's not based on seniority or habit, but based on the best use of your labored hours. And here's the broader point. The same thinking applies to everything in your kitchen. Who should be doing what and at what wage level? That's the non-utilized talent question in action. Service, that's the next category. This is where labor directly impacts revenue. And again, the tool here is focused observation combined with a staffing guideline chart. I'm going to bring over another tool here. And this is for each position, and this comes to focused observation. You're going to hear that term a lot over the next few minutes. And basically, this is a simplified example, but you line up every position, front of house and back of house, and you put in customer counts. What are typical customer counts throughout the day, from the lowest count to the highest count? And then you analyze by observing your staff in action during those different customer peak periods or low periods, and how many people does it actually take to create the right customer service level that you're accustomed to? How many people does it take at each of these customer accounts? That is measuring the staffing guideline chart is one of the most valuable tools you can build. It becomes the foundation for scheduling work we'll do next week. And it tells you at this volume, here's the staffing level of that balances guest experience, employee experience, and profitability. Cleanup, implementing pre-closing duties and efficient breakdown procedures to reduce after-hours labor can set up the next shift for success and reduce your total labor cost. But you got to always ask yourself, are these pre-closing duties disrupting your guest experience? The back of the house, usually not. Nobody sees the back of the house. But front of the house, you need to be more careful. And in the later seatings, maybe you reduce the room to one side of the room or one's room in and of itself, and you start these pre-closing duties without disrupting guest experience for those who are still there. So all of these come down to focused observation. You need to watch your operation objectively and ask at every stage, is this the best use of our people right now? So there are 4 guiding questions. How long should this task actually take? Is this being done the most efficient way? Could someone at a lower pay rate handle this more effectively and efficiently and at a lower total cost? And what obstacles are preventing a faster completion of this task? So the key message is smart labor assignment is the key. You don't want to slash hours. You need to assign them smarter. And to assign them smarter, you need to slow down and actually watch what's happening in your operation. I'm going to move to the next slide. Whoop, went too soon. And you need to build that culture of observation with your managers. Watch for operational bottlenecks during service, track time spent on routine tasks, ask the 4 questions we're looking at right here on this slide, and involve your team to identify improvement opportunities. That's the most critical one. Talk to your team. Your best employees know exactly where the bottlenecks are. Ask them, what slows you down? What do you need that you don't have? Is there a better way to do this? When you incorporate their ideas, they become more invested. They own the improvements because they've helped create them. Whether you're watching setup, prep, service, or cleanup, the 4 questions that we already reviewed in the previous slide. How long should this task take to complete? Is the job being done in the most efficient way? Could someone at a lower pay rate handle this effectively? What obstacles are preventing faster completion? Sometimes the answer they need is a new piece of equipment. Sometimes it's a better kitchen layout. Sometimes it's just breaking an old habit that nobody ever questioned. Your team has those insights because they're working the line every day. Whenever you incorporate their ideas, they own the improvements because they've helped create them. Engagement drives retention. Okay, let's boil this down. Let me tie this all together. Ideal labor stands on 3 pillars: guest experience, employee experience, and a profitable outcome. You cannot sacrifice one without the whole system breaking down. Labor waste hides in your workforce and in your operations, and the only way to find it is with focused observation. Slow down, watch, ask the hard questions, involve your team. You don't need to slash hours. You need to assign them smarter. This incremental improvement you'll find across the setup, prep, service, and cleanup compound over time into real dollars to the bottom line. Perfection isn't attainable, but if we chase perfection with the right framework, we can catch observation. So your assignment between now and next week is to apply the focus observation over the next few shifts, slow down, watch your operation through the lens we built today. Look at each of the 4 labor categories, use the guiding questions, talk to your managers and your team, take notes on what you see, and when we come back next week for the practical tools, KPIs, scheduling, shift management, you'll have real observations to work from, not just assumptions. So next week in part 2, it's going to be more hands-on. We're going to have a lot more live examples and schedules, and we're going to look through how you set all these things up. We're covering the key performance indicators that drive smart scheduling, sales per labor hour, customers per labor hour, labor cost percentages. We'll build labor schedules with productivity data, walk through shift management tools, and show you the continuous cycle of forecasting, scheduling, managing, and reviewing. Come back with notes. It's going to be a practical, hands-on detail. Okay, now everything we're building here requires data. You need to know your labor cost percentages and ideally separated between back of house and front of house. You need sales per labor hour, you need customer counts by hour and day. All the data has to flow from financial systems that are set up correctly. Your point of sale system talking to your accounting system, your chart of accounts built to give you the detail you need. If you're not sure whether your financial systems are giving you the data you need to make these labor decisions, that's exactly what the Restaurant Financial Systems Scorecard is designed to evaluate. It's a free self-assessment that covers your entire financial infrastructure, your accounting setup and chart of accounts, prime cost visibility, back of house and front of house split, reporting infrastructure and point of sale integration, cash flow systems and forecasting. It takes about 10 minutes to see exactly where your financials systems stand before we build the scheduling system next week. I'll drop a link in the comments below this video. Take the scorecard, see where you stand, and when we dig into the practical scheduling tools next week, you'll know whether your data is ready to support the systems we're building. Thanks for joining me this week. Hopefully you have another big weekend with the big tournament going on, and we will see you next week. Have a great week, everybody.